So happy Saturday, everyone. I'm Greg Dixon with the Note Show, and here with Maurice Thomas and Steve Johnson. We get together and talk about real estate investing topics, and we often have a roundtable discussion about almost anything related to real estate investing, and sometimes things outside of real estate investing. And Stephen here is going to talk to us about his adventures in notes and mobile home investing, and also a little bit about a past life in the theater business. So
Yes.
maybe you can introduce yourself here, and I'll make you full screen.
Awesome. Well, thanks for having me on here, guys. Appreciate the invite. Um, let's see. I'm in wonderful sunny Miami now. Is where I'm residing, and everything I do is remote work at this point with my businesses. It's been a journey to get all the way there over the last, I would say, 15 years or so. So prior to real estate, I actually got in. I was in theater. I studied theater. I was a technical director. For those who don't know what that might be. Think of a general contractor without any licensing, because I'm building shows and we're tearing them down within a matter of a couple, maybe 2 or 3 months at most. um, I was in that field for maybe 10 years or so, and that burned me out. It was long hours. It was underpaid. I put a lot of stress on myself. I found doing real estate on the side. I started flipping a couple of homes here and there. I started flipping mobile homes, specifically in parks. Very quickly realized, oh, wow, I want to be the landowner here, not just the homeowner and selling them on payments. Handful of years later, I've got a couple of partners now. They brought me into their mobile home park deals, and we own and operate, I think it's 14 parks across the Midwest at this point, mainly in Illinois, of all states. A lot of people avoid that place with, like the plague. And then about a year and a half ago, I started doing notes as well, very focused on generally non-performing second position notes. And I've really enjoyed that world because it is less chaos day to day, unlike the property management side of mobile home parks. For both of these companies, what I do a lot of is a lot of the operation side of things. I'm very systematic. I'm very like, okay, here's our SOP that we need to follow. Let's do it. Let's not get emotional about these deals, because we all get involved in the emotions there with every deal that comes across. Well, hopefully not every deal, but sometimes it comes up. And I'm very big on following those processes, delegating down, hiring VAs to handle more of those things and keep the company growing. At this point with the mobile home park business, our team has been delegating to more and more VAs, putting ourselves out of the day-to-day duties and more of like the week-to-week, month-to-month, bigger things out there, so we can keep growing.
Oh, that's great. Dr. Ivan has joined us here today, and he's also in Florida, and he has some experience with mobile home parks. So I'm sure we'll have some interesting stories to exchange here.
Definitely.
Yeah.
I think, Ivan, you and I were just talking moments ago, and they have their own interesting stories that you get. I've got some new horror stories from the parks that I hadn't picked up in other property management positions.
Well, I am fortunate where I don't have to deal with the day-to-day operations. I have a property manager. I guess I get the big headaches,
Mm-hmm.
the day-to-day things. So when it comes to me, is that I have to crack the whip and make decisions.
Right. Yeah. That's the big thing of mobile home parks is knowing, having the confidence to pull the trigger on those bigger decisions and knowing what to do, being able to delegate that day-to-day stuff. I can't imagine doing mobile home parks at a large scale by yourself. To me, it just is not possible. I am a huge
It's not
proponent.
fun.
Yeah, I'm a huge proponent of finding partners, bringing people in, leveraging what they're good at, and leveraging what you're good at, working as a team. And then second to that is delegating down to the teams as you grow the business. We're very big on got a handful of virtual assistants. They handle most of our park management duties. It's a lot of people go, wait a minute, how do you have somebody out of the country managing your park? Well, we found a way to make it work, and it works quite well. It keeps costs down for us.
Great call outs. Great call outs. I love to hear that. I think it's mission critical to have a partner. So here in Georgia, one of my partners, Lori, she's actually really into the mobile home space, and it's not something that I'm very familiar with. However, just my high level understanding, just being around Dr. Ivan and then some others who invest in there, she's looking to do some group home type endeavors with their homes here. But I want to go back to something that you said earlier when you said that you are really into the second position when it comes to non-performing notes. I think that's a very specific niche. And just in my experience in the last 4.5 years in the mortgage note space, I have very rarely come across individuals who enjoy second non-performing as well. So, what intrigues you about that specific niche when it comes to mortgage note investing?
So I partnered up with, at the time it was Jerry Sanders. We're part of First Shield Financial, and we teamed up about a year and a half ago. And he was focused. One of his mentors was doing second non-performing notes, so we had access to that. We started out there. We didn't know any better. We didn't know really that there were much easier avenues to go down. But the thing I've picked up is, we were able to buy in scale. That was always our intention, was we were going to buy multiple notes from a single tape at a time. Going to take down a whole tape, eventually, raise capital. And so we can buy, I think the first time we purchased, I think we got 6 or 7 notes for the low price of I think it was a total of $20,000 or something for all 6. So you can really scale up because you're buying lower dollar UPB notes. Fine, it's a lot of the time they're below $50,000. Sometimes they're only a few $1,000s. Then you're negotiating them down to around, call it 50%. So now you've got that equity there. Yes, you're in second position. Yes, hopefully they're paying their first. Yes, you've got to deal with the first position idiosyncrasies there. But we're buying for about 5% of the fair market value of that home. We're buying something, and that's control over that property. We can now force foreclosure with 5% of what that home is worth because we bought it at that note price. So generally, they've also got equity. A lot of the time, because they're delinquent on a second, does not mean they're not paying their first. A lot of people simply forget, or they got behind. They thought it got wrapped up in the latest refi. Whatever happens, and it's a lot easier to come up with $20,000 to pay off, this threatening foreclosure on a second than it is to come up with, 150 on your first. So we feel our chance to get a payout or a negotiation is much higher. The dollar amount's lower, unlike in first, but we're okay with that. We've gotten scale out of that.
Wow, that's a great call out.
Yeah. So where do you source these non-performing seconds? Is non-performing seconds or performing seconds?
Non-performing usually.
Okay.
We do get some performing. This comes from we've got a broker who handles notes that come from PNC and City National. So they create them. A lot of the time they were HELOCs at that time. They were created the same day as the first. Okay, fine, great. There's a small, sometimes it's 20 grand, sometimes it's 50. It's a small HELOC on there. They've been chipping away at it over time, and he buys out, a big giant tape of 100, 150 or something, and then we get the crumbs left over that he really doesn't want to deal with. So we're 2 or 3 steps removed down the line. And then as for, he's our main source for that. There are other people who have seconds. And it's not as prevalent as firsts out there, but I think that's okay because there's not nearly as much competition in seconds. There's so many note holders I know who are just like, no, I'm not going to bother looking at a second. And I'm like, okay, all right, you're not my competition. That's fine.
Absolutely. We have a guy that belongs to the round table here, go by Rodney Madison here. Him and I kind of touched base on this maybe about a year ago. and he received some training in this space, and I think he has several a part of his portfolio. But I think his goal is to acquire those notes and then get them performing and then resell them on the market there. Do you guys pretty much hold them for your portfolio, or do you guys, like you said, you just move forward on the foreclosure there?
We're generally going to. Most of them have gone more towards foreclosure, actually.
Uh-huh.
So we haven't done it. I haven't done enough personally to know if it's a higher rate than what you would see with first position. But we push for foreclosure, and then they pay up because, do they really want to battle over? Usually, they get that demand letter for, hey, you owe now $17,000, and they're like, oh my gosh, crap! I'm not going to lose my home. I have 70% equity or 25% or 50, whatever percent equity. They're not going to lose their home over $20,000. They're going to figure out how to come up with it. So we kind of get to the early stages of foreclosure where it gets filed, and then they're like, whoa, these guys are serious, and it'll come back in. We haven't had as many become performing because they really ignore it. A lot of people really feel that, when they got a charge-off letter 3 years ago, they thought that was forgiven, and that's not the case. It was written off the books of the bank.
Yeah,
that's fine. That's a bookkeeping tactic for the bank, but the money is still owed, and we bought that.
absolutely. Great call outs. Do you guys use the same model when it comes to finding mobile homes in Illinois? And what specifically attract you guys to Illinois when it comes to your mobile homes?
So that's a different company. I started with those guys about 3.5 years ago now. I don't know how long, but we have mobile home parks. We do create our own notes in-house. We don't put those out on the market anywhere because mobile homes, parks, as you guys as note buyers, you're going to look for a lot of, and we're just not at that point where we've got everything buttoned up nicely to present to a secondary market. We also have heavy turn parks. There's a lot of turnover. If we had like a 4 or 5 star park, something in Arizona, where it's a really beautiful park, you've got people who have been there for 20 years at a time, it's their second home, that's a very different strategy. But and then that worked well. We've actually picked up a couple of notes on mobile homes out there in Arizona. And we just right now, the notes are created in Illinois. There's a lot of bureaucracy about how to do it correctly. There's, you got to be Dodd-Frank compliant. You have to be compliant with the state of Illinois. They're very picky about how they do things. So it's kind of it's something we haven't, the mobile home park team hasn't transitioned that stuff over at this time.
And that being said, if I may, I've looked at mobile home parks in Illinois, and we've avoided that because of the laws in Illinois. Parks that we have in Arkansas, it's much easier for us to. We do use a RMLO, but it's easier for us to create the note and sell it. And we do the same thing on mobile homes that we have in Georgia also. So they're much more investor-friendly states. And what we have found in our niche is that they tend to stay longer, and if after 3 or 4 years, once or 5 years really, once they own the mobile home, they're there forever. So we still can profit because we own the dirt, we own the land.
Right.
So yeah, we saw a park. I'm pretty sure Peach Park. It's in Illinois, and we did the numbers, we did the research, and said no. At the end of the day, what told us not to pull the trigger was the state of Illinois.
And that is a big factor out there. We have been able to negotiate some really great prices on parks in the past when we were purchasing. And I would say probably the toughest thing about Illinois, if you have a turnover park and you're going from poor management prior and you're picking that up, you're going to have a lot of evictions. And in Illinois, it's one of those states where, because you're an LLC, you have to have a lawyer represent you. So right there, you're looking at lawyer fees day one on the evictions. They're very specific about some of their paperwork that you have to have pieces as well. So that's been another tricky. But good news is we've been through the ringer on a lot. So now pretty much any other state, it's like, okay, let's bring it on. Let's go. I'm not going to touch New York or California, but pretty much anything else, it's like, okay, we'll figure it out. We'll be comfortable. It's going to be fine.
What's the average timeline? From beginning to end to actually get someone out of the property.
Man, that can depend by county. Yeah. We've got one county with a fantastic lawyer. They're like a little operation, but they are monsters. They can get people out in 30 days. 30
wow.
Okay. Yeah, that's strange for Illinois. I don't know if he's paying off the judge or what. we have another park in another county in central Illinois. The tenants, there were 2 tenants. They knew how to play the game, and I think they were there for over a year. And the judge was very sympathetic, and they kept giving them time. Finally, even when it was in our favor, they still got like 60 days to move out. And it's like, guys, come on, what the heck? They're wasting water, they're wasting utilities, they're wasting time, they're wasting everything. You're going to give them another 60 days? Like, come on. That's been a very frustrating, unfortunate one. And that's just county by county, and you judge by judge at times. We have more rural areas at times, and this is one where there's not a lot of other options to get them out.
Have you ever dealt with tenants who will like married couples who one would file for bankruptcy and then it elapsed and then the other would file for it? You ever went through that kind of play where people play those kind of games? I don't want to say games, but yeah.
Oh, we call it playing games, yeah. We personally haven't had that happen to any of the notes. There was one there's been a couple we've been super interested in. In the due diligence, we see, okay, there's a bankruptcy filed. All right, and we're okay with that. Bankruptcies are not, it's just something extra to be cautious of. We personally like a bankruptcy, depending on how far it's gone, because you can see all that information, and you can see assets, liabilities, debts, income, blah, blah, blah. We did walk away from one really beautiful looking note because the husband had filed bankruptcy in the past, like 2 other times. The wife, it was, she wasn't filing with him this time. So it was like, okay, he's delayed it for 4 years. He has, he's smart guy. He's delayed his foreclosure for 4 years, and he's playing the game. And if he gets his case thrown out, the wife can just line up right in line right after. And it's like, let's not even go there. Let's not take that game.
Right. Last question, guys. I promise. Great.
You can ask a question. That's good. Yeah.
So let's say you go through a foreclosure, you get someone out. I'm not sure if you have boots on the ground or anything of that nature. However, have you guys ever dealt with any squatters? Anyone who kind of went in and occupied the homes or anything of that nature?
Yeah. Short answer, absolutely, man. So we have our boots on the ground. We have the legal process in Illinois can be quite slow at times. And we get people who squat. We actually have one guy who he got evicted last month, and we discovered that he was staying in the shed that on his lot, and it was just like, dude, come on. So that turned into a whole thing. We've had people who squatting happens often because they got nowhere to go. And evicted, if they've got no credit, if they have no income, this is the cheapest housing they're gonna find. And if they got kicked out of our parks, where else can they go? Not a lot of places.
Yes, somebody posted a video on TikTok that they had somebody squatting in the basement. So the women are with their dog, and he came in with 2x4s and screwed blocked the door, boarded in the door. That probably wouldn't be good in court, but anyway. What are you doing?
We're very careful about what we're going to do in that scenario. We're very clear, like, here's the letters that went out. We record everything. We make a very strong case. And I would say in that scenario where you've got a squatter, like, it's really unfortunate and frustrating, and you just gotta play the game slowly. If you want it to happen overnight, it probably can't happen in a state like Illinois where squatters are going to be more protected. The process is going to be slower.
Man, Steve, I really like that niche there. Someone that has skin in the game when it comes to their non-performing second there. I like that because they don't necessarily mean they're not paying on that first one. You kind of just come in, and I like that strategy. Thanks for sharing that.
Don't come and be my competition now. Don't be my partner. I'll take you in and help you out with it. Just don't take the bids from me. There's plenty out there. I'm just fine. That's the thing I've really liked though is a lot of those second position notes. People just forgot about them. They like, you guys know banks are very slow to follow through, especially banks when how hard are they going to work to chase $50,000? They're not going to work hard. That's just it's not enough for them. So we can pick up those things, and quite often they're paying their first. Or what we see a lot of the time is the first got paid off. Now the only recorded lien is this second, which is actually now a first. We see that, I would say, maybe a quarter of the time.
Mm-hmm. I think it's a different approach because most of the time you have like one-offs, one or two here and there. But if you're getting a tape and you're getting at pennies of the dollar, like that's a whole different strategy there. Like that's a different strategy.
Yeah. And that's what we wanted. I came from mobile home parks where the name of the game was scale. Jerry also does mobile homes on land. He saw the power of scaling. So we, when we started up together back a year and a half ago, that was what we wanted to focus on buying scale, and you can do that with seconds much more easily than you can on first. Are you guys? I'm assuming, are you guys typically buying first positions?
Yes, and it's something that it was taught by our mentor. It's not that he taught us to shy away from those. He kind of gave us the heads up around the legal issues around the second note and how complicated it could be. So it's not like we're afraid of them or anything of that nature. Just that we always get one-offs, like one or two here and there. Like I never had exposure to a whole tape. That's a different strategy.
Yeah.
What are your thoughts there, Dr. Ivan?
I've never seen a whole tape. I've always there's only one person when I first started investing in notes who was specifically looking for non-performing seconds, and I guess he was a real estate lawyer and he knew, but I never heard from him since. And then
New York or New Jersey, is he up there?
Sorry?
New Jersey or New York? Is he there?
No, he's actually in California.
Okay, I came across somebody recently that they operate up there, and we're not going to buy anything in New Jersey or New York.
No, I'm originally from New York and New Jersey, so I wouldn't buy anything there either.
Yeah.
But he was based out of California. He was specific. I guess he knew the market.
Yep.
And he was specifically looking for that. But that was like 4 years ago. I'd never heard from him since. And I guess out of 10 note investors, 9 will invest in performing or not performing first. And then maybe one I've met will invest in not performing seconds.
I would say you've met more than I have. I would say maybe it's 1 out of 15 or 20.
And in other group, you're the only one that I know. So
right.
Yeah.
I know someone else, but she's not part of the group. She has her own mentoring course.
Yeah, I was actually going to mention that as well, Dr. Ivan. I think what was it, Dauphine?
Daphne. Yeah. Like I said, everyone else that I know in the note business, I met like out of 10. I met maybe one.
Mm-hmm.
What I hope to do personally going forward is transition this from the single family market into the multifamily commercial spaces. There's a lot of notes out there that are delinquent right now. You take the Houston market, for example, and these big complexes are delinquent. I had a tape come in front of me the other day that was, I think the cheapest lien was $5 million, and I'm not that going to get there. And I'll take firsts or seconds against that kind of a property. It's really just a matter of, is the equity there, and it's extra due diligence on our part to make sure that our position is still going to be protected.
And what I'm seeing now is that I'm seeing a lot of non-performing commercial And recently in the medical and in the healthcare industry, a lot of buildings are coming on, a lot of notes are coming online, but then these again, they're not, I guess say I'm not at that position yet to buy a suite of buildings, you know,
Yeah.
or buy the note on the buildings, you know.
That's my goal. Yeah, I want to buy. Give me that scale again. Give me that scale. I learned through in the mobile business, scale is so much more valuable because we started out with, I think we had 6 parks and we had 1 property manager, and now we've moved on to 8 VAs along with I don't know 15 boots on the ground spread across the parks, maybe a dozen. I don't know what it is right now. And learn how to hire and fire and go through legal stuff so fast when you've got that scale, and it really builds out your toolbox a lot.
Absolutely, absolutely. Last question, I promise, guys. Last one.
You said that last time.
Yeah, you don't have a limit actually.
You touched on something earlier around VAs and how you use VAs in your business. The first part, 1A, is how do you find your VAs, and then 2, how do you incorporate them into your business without jeopardizing the IP of your business, if that makes sense?
We go through Upwork, and we've used a lot of VAs from the Philippines. They're almost exactly 12 hours offset from us. And although that sounds terrible, that is part of their culture. They very much have a work culture where they know that they're working for Australia remotely, which there's no time difference there, or Canada, US, some European countries. So they're already accustomed to the 12-hour goofiness that's there. They're very well educated. They speak really good English for the most part. We avoid the placement servicers out there, where they're like, hey, we have a pool of people and, you give us your SOP book and they'll just call and do stuff. Our VAs I interview them, got an extensive interview process. We're very careful who we pick. They've been with us. Most of them have been with us, I think, going on 2 years or more now at this point already.
Nice.
And they work. They started to be trained directly by me. Now that's getting delegated down, to other VAs who are training the VAs as they come on. And they're doing property management. They're doing marketing. They're doing, one VA handles legal, everything legal. She handles 95% of the evictions at this point. Like I
Really?
seldom have to chime in unless it's a really weird extreme case where it's taking longer than normal. Whereas when I started, I didn't know what the heck I was doing with evictions, and now she's got it down. We've got one guy, all he does is payables. He takes invoices, he gets paid, he does our weekly Thursday payables meeting. It's such a powerful team when you start leveraging those people who, they're so intelligent and they get to be with our company long term.
So it sounds like you pay very, very well, Steve. You got happy employees that recruit other individuals.
We could we pay. It's significantly cheaper to pay over there in the Philippines than here in the U.S. So I want to say out there, a decent wage is $6 an hour. And that's pretty good.
$6 an hour?
Yeah, $6 or $7 an hour. They can live on that quite comfortably. That's a decent wage out there. My philosophy to keep them here long term is to also have a good work culture where it's not just corporate feel. Yes, we are corporate in a lot of manners, but they get one-on-one meetings with me or the other team members where they get to voice, hey, I'm having this trouble with this thing. I don't want to be breaking people up in a culture that is very cold and doesn't have that typical Wall Street corporate.
Yeah.
But as we grow, I'm also aware that that's going to happen more and more.
It's a great call out. Great call out. I'm actually reading a book here called The Art of Influence by Chris Wagner here. And when I grow up, I want to be like you, Steve. I want to make sure I have that kind of culture in my business, in my shared home space. I'm serious. And it's something where I'm struggling with my processes and systems a bit. Not as much. It's just a matter of when you put somebody in place for that leadership role and they don't share the same vision or goals as you. It's not a good fit for sometimes, and they're not able to screen or do what you would do in that case there. So again, I'm trying to learn, but if I could take a shortcut and learn from you, that'd be great.
So Maurice, maybe you could do a little introduction about what you do with your shared home space. Just because because Steve probably doesn't know, and some of our viewers probably don't know either.
So you touched on something earlier, Steve, around partnerships. So in this business, this happened to be my wife. My wife does our operation side of things. However, I try to find the real estate. So as I begin to scale for our shared living spaces or our group homes, depending on what state you is, it's called different things. Could be assisted living, resident assisted living, different things of that nature. But more specifically, we have homes in Ohio and we have homes here in Georgia, and we're looking to scale to the mobile home space with my good friend Lori here. So going through a little learning curve there as it relates to the mobile home space. But something you said earlier, when you ask someone to leave a property, they really don't have nowhere to go. And that's kind of like the niche that we kind of fill in for, people who have backgrounds or people who have bad credit. We do a shared living model for those individuals where we kind of just contract beds. We don't contract the whole house. They just contract the beds for a specific time at a specific price point. And we have found that has been very you can make a lot of money in that space as it relates to just renting it to a traditional one tenant, for 12 to 2 years, 24 months lease. You can kind of get one tenant in there, kind of cover a single family, not a single family, but a single what is it called? A studio apartment. You can look at those different things of that nature. But to answer your question, Greg and Steve, I have been doing the shared living space here for a little bit here, and I have found it very intriguing, which I like to go back and purchase notes now, with the capital. So I just have to figure it out here. I don't have the network when it comes to a virtual assistant right now, and I don't know how to screen. And my fear is that I give someone too much power, and they kind of run off and leverage it somewhere. So that's why I asked that question around your BAs and different things of that nature. So I'm learning.
I'll tell you, the more you scale, the more you're allowed to screw up, because you will hire wrong. I guarantee you. We hired a VA with us with outside of business, and it just wasn't the right fit for a couple different reasons here. The first few VAs, we've gone through a cycle of VAs, and it takes a while to craft that. And that's, again, why I'm such a proponent of scale. When I first started doing mobile home park, I was determined I'm going to find a park in my backyard, 30 lots, I'll manage it, and blah, blah, blah. And now I run away from that idea. And I would, if someone says that's what I want to do, I'm going to encourage them to scale bigger, because you're buying a job. And when you're, let's say you have a full-time park manager, when that park manager quits, gives you 2 weeks notice, you have no practice of how the heck do you interview and fill that position in the next 2 weeks, a month, whatever it is. Whereas if you've got, 14 parks like we do, we're turning that over somewhat often. So it stays a little bit fresh, because hiring and firing doesn't happen that often. You get out of practice, and you don't get that practice if you don't have scale.
Exactly. Great call outs.
I would also mention too, you talk about systems, building the operations and everything. I'm the operations guy. I've got kind of that quasi-engineering background of theater, of building shows and designing. So I think very analytically, very formulaically. I want it to be 100% perfect before I release it, and I have had to work so hard to drop that mindset. And in our company, 80% is good enough. Sounds terrible, but 80% is better than waiting for 100%, which never arrives. And so that is part of the approach that we take up at the leadership level, all the way down to our base. It's like, you know what? Hey, give me 80% there, give me 60% there, because if you spend the next 6 months trying to get to 100, you never got, you didn't get there in the time frame that I needed you to.
Great point. Great point. So I know Greg is into Greg is a part of a band as well, and you kind of touched on the theater portion of that. Tell me more about the theater lifestyle that you have outside of note investing.
For me or for Greg?
Yeah, I think Steve's left that behind, right?
Oh, yeah, I haven't done theater now.
So, but that's a good segue. I have when Steve and we were chatting about this, I made some theater comments. We exchanged theater mythology stuff. Like there's a whole thing about staging Macbeth and even saying the word Macbeth, and you come up with a story about this superstition around whistling. Anyway, I have some friends in the theater business, and I'm going to show you something right now. That it was, and maybe you probably know this production. Maybe you've even seen it, Steve. It's called Woman in Black, and it's I'll play. Let's see here. I'll play. Okay. I'll play the little intro to this. So it was a production that ran in London, second longest running.
The most chilling night that you can have in a theater. London's second longest running play, The Woman in Black, comes to the Jericho Arts Centre beginning February 18th, 2023 for a limited engagement. With Vancouver favorite Bernard Coughlin directing and starring, The Woman in Black is more than just a play. It's an experience. When aging solicitor Arthur Kipps, Bernard Coughlin, engages a young actor, Aidan Wright, to bring his eerie experiences at Eel Marsh House to life, neither he nor his dramatic collaborator expect the haunting to move into the theater and curse them both. Ghostly sounds swirl, and the audience will learn not to trust their eyes as this show conjures the very essence of the woman herself.
Yeah. So one of the things I love about Kartra is because you can create something really creepy like this, and it was creepy enough that my current wife, my second partner, wouldn't go see the show because they don't like ghost stories. But it's really one of the best. I can understand why it had such a huge run in London because it's extremely well crafted.
Very cool. I don't know that one actually.
But it's all about haunting, and you guys come up with a few haunting things with the notes business. So.
Yes. Yeah. Well, I will say, I've been haunted less, I think, by the notes than I have in the mobile home park world because the mobile home park world has scaled much bigger so far, and it's more chaos day to day. Something I really love about the notes business is there is a prescribed legal process if things start to go sideways, and it can only go so fast. There's much less drama day to day. I still think of one of the most interesting horror stories I had was in the mobile home park where drag racing was happening down the park, and somebody crashed into a home and knocked it off the blocks. Fortunately, it was a vacant home. Nobody was there. But there's one like, what a weird insurance claim, right?
Yeah. So I've got a question. What's a mobile home worth in Illinois? What's a sort of an average cost?
Oh man, that can depend on what market you're in, and if you're in Chicago, you could have lot rents of $800 to $1,000, I think, in certain parts of Chicago. One of the parks that we purchased about 2.5 years ago, I think, lot rents were $150 out there. Most of our parks are around $300 or so for lot rent, plus and then utilities on top of that. The homes themselves can range from $1 when they're really junky fixer-uppers to we can put in mid-level kind of stuff anywhere from $20,000 and up. And then of course, brand new homes. We don't put brand new homes in our park because our markets actually they would be overpriced for most of the markets that we're in. but brand new homes can be $85,000 on the cheap side, and go up from there.
Yeah, I'm from Vancouver, where $500,000 will buy you a really nice chicken coop. And yeah, and we have an RV, and we were renting space in an RV park, technically in West Vancouver, and they also had a mobile home park. And so one day I decided to look on Realtor.ca to see what those units went for. At that time, they were about 250,000. They're probably over 300,000 now, but it's a nice spot overlooking the ocean.
Yeah, yeah. I
But
mean,
but it was
there's
but
markets
it's,
like that for sure.
yeah, but I, most of the, especially the smaller rural areas, those are numbers that are inconceivable.
Yeah, yeah. Even $300 lot rents at times that people. And the thing that shocks me is the number of times people can't come up with that much money a month. It's just like, what are you doing? How are you not finding call it $500 a month once you add utilities? You're behind $500 every month. And, it really is affordable housing. And Maurice, we I understand you serve people who are down on their luck, and I mean we do too. And some people just really cannot find the luck.
I agree. And it goes back to like you said, when it comes to money management. People who play the game. People who have figured out the system. They will do it no matter what. Even if you give them and you extended them an opportunity, to actually say, hey, I'll give you this property for 90, 120 days. One, so you can work your credit back up, and then two, so you can actually just get an opportunity to fix your credit, and then not only that, just save some capital so you can go get you a 1-bedroom apartment or a house or whatever it may be, townhouse, whatever they're looking for. But that second chance, they don't take it serious. If I'm being honest with you, it's a mindset thing sometimes.
It is very much a mindset thing, because most of the horror stories we have, it's the 80-20 principle. It's 20% of the tenants cause 80% of the drama, and I would say it's 20% of that 20 who are the big horror stories. The guy that stayed in the shed after he got evicted. I don't know how you live in a shed, but he's in that kind of a spot in his life, which is unfortunate. And
absolutely,
we extended everything we could, and we're still a business that has to run and operate to make money and pay back our investors, and we can't give everything for free.
Absolutely. How did you find out about the drag racing? How did that call occur? Like, what happened? Did you hear from the police first? Did you hear from an investor? Did you hear from the property manager? Like, how was that call?
I think it was from our boots on the ground, or the property manager. They informed us, and they're like, "Hey, so there was a car accident last night. Somebody ran into the house," and I can remember that meeting. Be like, wait, what do you mean? Someone ran into the house? Oh, okay, all right. So they bumped into it, and they're like, no, the house got moved off the foundation. And, wait a minute, no, what are you talking about? That? What do you mean? Do you know what you're talking about? And it was like, oh, the house moved off the foundation because the car smashed into it hard enough.
Wow.
And apparently it was the car wasn't damaged enough that the car still drove off somehow, miraculously.
Oh, they ran?
So it was
wow.
fun too. Yeah.
That's they were going at a very they were speeding at a high rate, because to knock was it a double wide or a single wide? Whatever it was single wide.
Yeah.
That's
So there was
imagine that.
I love it. You're just out of words, man. I love it.
There's an incident in the Vancouver area.
Mobile homes, okay, and place it on the slab and have the car. I mean, that takes the cake.
So there was an incident on the news here last week. There was a parking lot, like a mall parking lot in the Vancouver area, where somebody came in a vehicle at an enormously high speed. It looked like they were going almost 100 miles an hour. They hit another vehicle that was actually larger than it, and it knocked the other vehicle in, and it completely destroyed a flower shop. It was just
Wow.
just phenomenal. Like, how does somebody get that kind of speed going in a parking lot? But anyway, I have a story, an embarrassing story about myself. When I was about 20 years old, I had an MGB, and I was working on it out on the street. And I went in
What's
and
that?
got a coffee, and I come out, and the car was gone. And I said, "Oh, where did the car go?" Anyway, I saw this small crowd down about a block down the road, you know, collecting, looking at something. So I went over there, and the car had rolled down the street over a retaining wall and poked its nose in the basement window, and broke the window. And they were in there watching television. And all of a sudden, there's a car there. So I come, and they said, "Oh, I wonder where this came from." I said, "Yeah, that's mine." By that time, the police were there, and they came, and they thought it was really funny. They helped me push the car back on the road, and I paid to replace the window. But I don't think they would laugh today if I did that again today.
I was gonna say that's a different time there, man. Wow.
Yeah, that's a different time. Yeah, but I mean, so I've lost a car, and then a car just actually 2 houses down, somebody had run. It was at a T intersection, and one night somebody, drunk, running down that hill, didn't make the corner, and they hit the house pretty hard.
Oof.
Oh my.
And there's a drag racing thing going on in this little town this weekend. So
Very cool.
yeah, so we were last week we were talking about was it last week? Maybe the week before, we were talking about things that can go wrong. That Ivan talks about termites, toilets, and tenants, kind of thing. And then we've added another T because somebody on the show like this said, "Oh, I gotta go. A tree fell in one of my houses."
Oh,
Yeah.
Termites, trees, turn on toilets.
yeah.
Yeah.
Trees in mobile home parks. Those are definitely one of the terrible T's for sure. Yeah.
Mhm.
Either underground or above ground. It's frustrating because it's like, here's this mobile home park, it's got this beautiful, it looks really nice because it's got all the shade and everything, but man, that can do such damage to your infrastructure on the ground, and then things can fall on the house. Trees are
In the Vancouver area, somebody says, "Well, how do you get rid of bamboo that's gone wild in your yard?" Well, you move, because you can't get it out. And it'll grow through your house.
yeah.
Yeah.
I have a question you just made me think about.
Wait a minute. You said you had no more questions.
No, that was, well,
5 minutes ago.
he's got some bonus questions.
I'm just busting his chops. That's all.
No, that's Steve. When Steve talked, he actually had me thinking here. But Steve, I come across your content a lot on LinkedIn as it relates to I'm not sure if you're marketing for, capital partners, or if you're marketing just to put it out, like the kind of services you are doing, but you have some really great content floating around there. Like what? So what are you doing these days? Are you looking for capital partners? Are you looking for joint venture partners? Are you just putting your services out there?
I would say right now I'm more or less just focusing on finding capital partners and JV, but more on the end of passive partners. We want to definitely bring people in. We feel we've got a very solid system in terms of due diligence. That's one of my things that I really go through is due diligence on the notes. And this, I'm speaking mainly for the note investing business. The mobile home park business, that's kind of all, we've got that one stabilized. We're happy with who we've got on the team. We're good there. We're not currently buying right now. We're turning over our parks. But the note investing, yeah, we're looking for capital partners and people who want to be mainly passive in that. And if they want to come along and see how it might work, we can definitely do that kind of a thing. Non-performing notes, we might not see a penny coming in. So that's a different kind of investment that, if someone joins us, they have to be comfortable, like, okay, I might not see any money for 18, 24 months if this goes to a foreclosure case and it gets delayed and delayed and delayed. Yeah, thanks for asking. I really appreciate the compliment on the LinkedIn stuff. I've been working on that and putting out valuable stuff out there. Thank you. Appreciate that.
Yeah, Larry and you guys are really good. It's another guy too. Man, what's his name?
Larry Hoffman.
Larry Hoffman and Steve here, but it's another guy that's in our group as well, Dr. Ivan, the guy from London, I believe. Can't think of his name, but he has some really good content as well. Like those are my top three guys when I look at content. It's very interactive. It's always up to date information, and it's real live and tangible. It's like you guys are always. I like how you present the information. I'm more of a visual learner sometimes when I'm looking at a lot of numbers. However, but I like to read and self educate as well. So I appreciate the content. I really do.
Thank you. I'm going to look for your comments more often now. You're calling me, I'm going to call you out and then expect the thumbs up and once more.
So it looks like we're being haunted by Dr. Roberta Jones. And I don't know if you're ready to come on. Anyway, she's got her camera off now. Anyway, so there she is.
Okay. Hi.
Dr. Jones, hey now.
I just left.
Hello.
Yeah. I'm in the wonderful ATL and on the way back to Ohio. And so, how you guys doing today?
Good.
Very good.
Good. I wanted to come on because I got a lot of questions. Is it a good time to come on and talk?
Sure. Yeah.
Okay.
Yeah. We Maurice thinks he's run out of his questions. I'm sure that's not true. But,
So he's got another 5-minute holding period before he can ask his next question. So see your turn.
Okay. Well, one of the things I wanted to talk about is I think I heard Maurice say it earlier, and that was the definitions in each city and town when it comes to living space. For the IRS on the nonprofit side, I love that side. I've developed a whole major program on that for development. And what is really good is that I'm at the airport at ATL. So if you hear anything come on, that's because I'm at the airport, okay? But one of the things I wanted to say today was I found that in a lot of my calls, people are looking for homes, okay? Those homes are available under the nonprofit. Believe me, they're there like crazy. And the good thing about it is that the investors has an opportunity to come in and invest, whether it's trailers or it's homes, okay? The government doesn't look at them separate at all, as long as they can have a bed, okay? Also, I had one of the calls this week was a young lady that has already hit her first house, and she has in that house 5 different matrix of people. And as I listened to her, she had called the VA and asking the VA to give her more veterans. And they had said to her that they wanted a single unit, okay? So that means the veteran would take all the rooms in the house. So when I research on that, what they were telling her is that the whole house out of her rental units had to be vets. All right. So I wanted to bring a clarity to that. Also,
Oh no, we lost her.
Lost her.
yeah.
Yeah. I like that
so I
idea,
can hear
Marin.
you.
Oh, there you go.
I can hear you.
We see you again, Dr.
Okay.
Dr. Jones.
I can hear you. Let's see. I cannot see you.
We can
Right?
now.
Can you hear me?
Yeah.
Can you hear me?
Yes.
Yes.
Yes, you can hear me. Okay, let me just go ahead and finish. The other one is I got some calls about individuals that want to connect the nonprofit with the for-profit entity. Now, this is how it works. I don't want no one to be misunderstood. If I was at my desk, I would love to meet you next week. I will be back in Ohio next weekend. I would love to show you that the for-profit C corporation is a legal non-human person. It's a legal non-human person. He has owners, which is called shareholders. When it came over to the nonprofit, the legal non-human person is in charge now. And so he looks over at the shareholder and say, there is no shares, so you get no profit. But the profit is made by this legal, non-human person. All right. And so I want to present in my animation to you guys next week. That is exactly like it is, because I hate that word nonprofit. Because that charitable entity has a lot of money and it can do a lot of things. Number one, I love it because it can, in one side, go into any federal program and touch any house, no matter what. So you have a whole big yard full of, I mean, homes, whether it's from the FHA program, which allows you to have your 203K mortgager to put a house where a house used to be, or it could have been a part of the houses that was taken or foreclosed on. Banks and the big nonprofits went to the banks and asked them, could they uh, give those houses back to the nonprofits, charitables, to actually prepare them. So the charitable went out and found their investors. So I need investors on this side that will use the same money that you use on your for-profit, okay, that will actually loan it to that charity. That charity processes the house, owns the house. Now, the investor never owns that real estate. Okay, they never own the real estate, but the charity does. The investor gets their money back plus their interest back. All right, so that's how that's working. It doesn't work any other way. You get your interest back and you get your money back. The second way it happens, if the investor comes in and say, I want to invest in that particular property, right? And but they don't want to sell it, okay? They want to maintain the rental income on it or the ownership. It will own the property with the nonprofit. The nonprofit would own it, and the investor will own that property at the same time. So
Absolutely.
a lot of times the investors don't want to just take their money out. They love the fact that they're providing the property and they want to maintain the rental income. Okay, so it can work several other places. The third thing that is very, very important is that your non-for-profit, which is a charity, can adapt to any HUD program. It can actually be hired to provide housing for the very programs that you guys want to provide rental for. For instance, there is what they call a Section 8. Everybody knows Section 8. But as a for-profit entity, an LLC, C Corp, anything that's not a not-for-profit, can now apply to be a U.S. government contractor and go right into GSA or HUD or FHA.
Yeah, so some of my friends think I'm a
home.
Section 8 in terms of the catch-22 meaning of the word, but for Klinger.
Absolutely. I love this topic.
Say it one more time. What'd you say?
Well, you had faded out. I made a joke that some people think I'm a Section 8 in the terms of catch-22 or MASH.
Okay. Can you guys hear me? Because when you talk, I just hear like it's an instrument. But I can hear you guys.
Yeah. Anyway, the topic of the discussion today is Stephen Johnson was telling us about what he was doing with second position notes and mobile home parks. So that's the
I can't hear you. I can't hear you. I can't understand what you're saying unless you put it in the chat. I have no idea. But I just wanted to come on, okay? I'm gonna go to my gate. I'm really at my gate. You can't see.
Yeah.
And I'll talk to you guys next week. I'll make sure I'm online next week.
Okay.
All right, Dr. Jones.
Okay. Okay. Goodbye. Thank you.
Bye.
Thank
Bye-bye.
you.
So Steve, that's what I was talking about earlier. Like my wife do the operation side, so we have a foundation or a nonprofit, and Dr. Jones helped us set that up. A little bit over a year ago. So when it comes to the operating side, my wife had been working with Dr. Jones there. So I'm looking forward to kind of learning more from her as it relates to, your structure and everything legally, and then maybe getting with Paul Levine here, and maybe making sure that I have everything squeaky tight, when it comes to the IRS and different things of that nature. But like you said, those operations, like I don't want to err on that behalf of the IRS there. So I've been making sure that any money that come in, I've been investing it back into notes. I'm not taking anything for profit.
Perfect. That sounds good. I'll send some my way. I'll put it in a second for you, and you can be a
Yeah.
second note investor as well.
Yeah. So one of the reasons for doing this show, really, and this roundtable discussion is to have introduce many people to each other with opportunities to collaborate. So, because almost everybody's doing slightly different things, but there's room to help. And Maurice had asked about looking for capital investment and things, and I think almost everybody is looking for people who want to do some passive investing. Maybe you can say what you're looking for, Dr. Ivan.
But I'm looking again for passive investors to invest in notes backed by mobile homes, and I am looking. That's why I text you, Steve. I'm looking for a possible capital investor in a mobile home park in Nebraska that seems to be promising.
We can certainly talk more about that and discuss what that looks like out there. I don't have anything out in Nebraska. I don't know the area.
It's a landlord-friendly state.
Right. Oh, I mean, anything other than Illinois, New York, and California. At this point, I'm going to do better, and it's going to be fine.
Mm-hmm.
Although Colorado, I have been advised to stay away from Colorado because Colorado in the last few years has turned into a very tenant-friendly state, and there was, I'm sure it's still going on. They were trying to, operators couldn't sell their parks fast enough because they were putting in so much new legislation about what you have to be doing and what you can't be doing in mobile home parks. And I know a lot of operators were trying to flee that state.
I love it. Nice. Dr. Ivan, you didn't put out your handles or how somebody can contact you.
My handle is the Note Doctor, www.thenotedoctor.com. Anybody can reach me through there. I have a Calendly link, and I'm open for business.
Okay.
Same thing for you, Steve.
Yeah.
My contact info is at the bottom of the screen here, my phone number and email. I would say probably the easiest place to get a hold of me at this point is LinkedIn. And it's linkedin.com/connect with Steve Johnson. There's a lot of Steve Johnsons. I'm not a very unique name, so connect with Steve Johnson, and you'll find me there. And Maurice, I expect to see your comments and your thumbs up on all my content now.
Absolutely.
Yeah. And Maurice, and you're TIGlegacy.com, right?
Yes, TIGlegacy.com, touchbyglamhome.com, and touchbyglamresidency.com as well. You can find me on any one of those three if you want to book a consultation. If it's notes, it's going to be TIGlegacy.com. If it's more so of shared living, it's going to be the touchbyglamhomes.com.
Very cool.
Okay.
And Greg is our Kartra guru here.
Kartra Whisperer.
Greg,
Kartra Whisperer, yeah.
Yes. Absolutely. Greg, where can people find you?
Well, anywhere. LinkedIn is the best place to connect, really. But, it depends on what day it is. I'm Shared Visions Unlimited on Mondays, on the Note Center on Saturday, on Total Traffic and Conversion on Friday. So I don't know what I'm going to do when I grow up. So there we go. But you can go to LinkedIn. LinkedIn is the best place to contact me.
Awesome. Love it, man.
Very good.
Nice.
Okay, well, anyway, that's great. We've gone over just over an hour. Perfect. So it's not the longest one we've done. So,
But I really appreciate you guys inviting me on, having this roundtable discussion, and getting to share my stuff out there with talking about what I'm doing. That's the thing about LinkedIn. You got to talk about what you're doing and let people know.
yeah.
One question, Steve. Are you a Les Paul or a Fender guy?
Right,
man, Les
Gibson's the other
Paul.
one.
Les
Les
Paul.
Paul?
Yeah, I've never had one. I would love to have one. I mean, I was telling, I think before you jumped on, I was telling Greg that the guitar I've got here in the background that's blurred out right now. That's just my junky garage sale guitar. I paid more for the strings to put on it than I did for the guitar itself. Because I don't play like I used to, but I definitely dreamed of having a legit Les Paul. Like that was it.
Who's your favorite guitarist?
I would say John Mayer is really far up there in terms of just unique style that he plays. And I really do appreciate, I really like that kind of bluesy, down and dirty kind of stuff that he does. Anything that's going to sound similar to John Mayer, that's in my court for sure.
I like John Mayer, but personally, I prefer Joe Bonamassa.
Okay. And then I did take my hand at trying to learn flamenco, and
It's
wow,
hard. That is hard.
tough one. I thought I could do it. Nope.
No.
Like that one takes dedication, and Greg, you were mentioning as a percussionist, I can't remember what you were saying, but percussion is. I think you were making fun of them, but
going back to flamenco, I saw John McLaughlin, Paco de Lucia, and Al Di
Al
Meola.
Meola. Yeah, Friday
Yeah.
night in San Francisco. Yep.
Yeah, and they played and they did that stuff, and like John McLaughlin's a maniac, right? And they were doing in jazz they trade fours kind of things. They were going around. Each one had a quarter note. They go, like it was just insane how fast it could be.
Yeah.
And they're all just fabulous players.
the way they throw the percussion in there, the way that the beats work in flamenco, like my brain, I'm just like I can't do it right now.
So my thing, as a guitarist, my goal is one day is to play Santana's Samba Tapis. Yeah,
Okay.
Samba Petit. Yeah, that's my. If I get to the point where I can play that convincingly, I've made it somewhere. But I needed money and I sold my Les Paul. So, I talked to the owner though. He butt called me by accident, so I asked him how the guitar was going. So,
Very cool.
Cool.
Nice.
so that's fun. There we go.
All right. Well, I got to run.
You got to run.
Thanks for being on the call, Steve, and hopefully we'll connect with this park.
Are you guys going to be at DME this coming month here?
Fortunately, I won't be able to. My son is moving to North Carolina. He asked me to help him move, and it's going to be a road trip with his dad. So I'll be missing it.
Well, you're going to be close there in North Carolina, though.
Kind of close.
A lot closer than Vancouver.
That's true.
Greg or Maurice, are you guys making it?
I haven't committed to it 100% yet, but I do have a hyperlink, and I keep looking at the price, and it's the price coupled with the days. We're traveling next weekend through Wednesday, and then coming back here to Georgia and going up to Tennessee. I'm kind of debating if I want to drive or fly there, but I haven't committed yet. So
A little tight.
thinking about it, but I want to catch up. If you go in there, I want to catch up with you, and I want to catch up with Dave. Dave is having a meet up there as well. What's Dave's last name?
Hutz.
Foots, I believe.
Yep.
So
Yeah.
he's having a meetup there that I kind of want to be involved with as well. And of course, I catch up with my mentors, Desi and Patrick, hear them speak. So I'm on the edge.
Yeah.
I'm excited to meet them again because I've been seeing them on Zoom for the last year. Because I met them the first time at DME last year. We signed up, and now I'm excited to be like, hey man, good to see your face again for real. And here's everything we're doing.
So did you do the axe throwing?
Last year I did not arrive in time for the axe throwing. It's not my scene, so I still need to get my plane ticket. If I happen to get there in time, yeah, I'll go.
Right.
I'll make it. It's fine.
That was a great question. Yeah, I'm thinking about there. My wife told me go. But again, I have a lot of things coming up: birthdays, summertime, summer camps.
Yeah. No, well, yeah. So the DME could be the summer camp for you.
Exactly. For adults.
Anyway, I gotta go.
I hope to go one year. I'm not going to go this year, but I'd hope to go one year.
All right.
Have a good rest of the weekend. Okay.
All right.
All right.
Thank you.
Hop off, guys, too. And thank you again so much for inviting me on here. I really appreciate it, guys.
All right.
Oh, you
Thanks,
gotta
Steve. I look
send
forward to seeing
another-
you.
Take care.
Oh, there we go. Because you look like John Mayer.
Okay, I'll take that. Sure. I don't think I do, but I appreciate it. Thank you. Bye.
All right. There.